Welcome to Dominant Investing Strategies. Today, we will discuss the Ichimoku Cloud Trading Strategy. Remember, each strategy will take time and practice. In this tutorial, you will learn what is the Ichimoku Trading Strategy, components of the strategy, and its applications and limitations. What is the Ichimoku Cloud Strategy? The Ichimoku Cloud was developed by Goichi Hosoda, a Japanese journalist. He spent 30 years perfecting the technique before releasing it in the late 1960s. An Ichimoku Cloud is a collection of technical indicators that show support and resistance levels, as well as momentum and trend direction, used to assess the markets. Ichimoku Cloud trading attempts to identify a probable direction of price. It helps the trader determine the most suitable time to enter and exit the market by providing you with the trend direction. It also uses multiple averages to compute a cloud, which attempts to forecast where the price may find support and resistance in the future. There are 5 main components that provide you with reliable trade signals: the conversion line, baseline, leading span A, leading span B, and the lagging span. We will go over the calculations and applications of these components. First, the conversion line. The conversion line represents the midpoint of the last highest and lowest price points over 7 to 8 time periods, where the time period is a single week. Its mathematical formula is as follows. The conversion line is the 9-week period high plus the 9-week period low, all over 2. The baseline is similar to the conversion line, but we have to account for 26 different time periods. It's calculated as follows. The baseline equals the 26 period high plus the 26 period low, all over 2. Leading span A represents one of 2 cloud boundaries, and it's the midpoint between the conversion line and the baseline. It is plotted 26 periods in the future. Its formula is as follows. Leading span A equals the conversion line plus the baseline, all over 2. Leading span B represents the second cloud boundary, and it is the midpoint of the last 52 price points. Same as span A, it is plotted 26 periods in the future. It is calculated as follows. Leading span B equals the 52-week period high plus the 52-week period low, all over 2. Lastly, the lagging span is created by plotting closing prices 26 periods behind the latest closing price. So, the lagging span is the last close price plotted 26 periods in the past. The above steps will create one data point. To create the lines, as each period comes to an end, go through the steps again, and create new data points for that period. What does the Ichimoku Cloud tell you? When leading span A is above leading span B, this indicates to traders that price momentum is currently increasing and the price will keep rising. When this is the case, the graph will be shaded green. On the other hand, when leading span A is below leading span B, the underlying asset or stock is likely moving in the negative direction. When this happens, the cloud will be shaded red. Here are some of the basic interpretations of the Ichimoku charts. When the price is above the cloud, we're in a bullish trend. When the price is below the cloud, we're in a bearish trend. When the price is in the middle of the cloud, the trend might be changing. Crossovers are another way the indicator can be used. Watch for the conversion line to move above the baseline, especially when the price is above the cloud. This can be a powerful buy signal. Traders will often use the cloud as an area of support and resistance, depending on the relative location of the price. The cloud provides support and resistance levels that can be projected into the future. This sets Ichimoku Cloud apart from many other technical indicators that only provide support and resistance levels for the current date and time. Traders should use Ichimoku Cloud in conjunction with other technical indicators to maximize their returns. For example, the indicator is often paired with the Relative Strength Index, or RSI, which can be used to confirm momentum in a certain direction. The video for RSI is linked in the description. Importantly, different trading platforms like Thinkorswim will have Ichimoku Cloud software, which will allow them to create the charts for you. One of the limitations of Ichimoku Cloud is that the chart can look busy with all the lines. Most trading softwares, however, allow certain lines to be hidden. Another limitation is that it is based on historical data plotted in the future, which does not necessarily predict the future. Like any analysis method, it is important to practice this theory. A cloud just helps you analyze the trends and identify entry points. This does not mean that the market will 100% follow the cloud. Before entering a position, you need to wait for confirmation that the market is conforming to theory. Thank you for watching this video. Please subscribe and like the video if you found this information to be useful. We wish you successful trading, and let us know in the comments if you have any questions. In the next episode, we will talk about another trading strategy.